So let's have a sesh on income statements. Income statements are one of the key financial statements that you must know and you must know well. The other one is the statement of financial position, and then there are also cash flow statements. So let's go through income statements. The key thing to note is that income statements is the new name for what was previously called profit and loss accounts. And that's probably the easier way to think about it, because income statements will ultimately show for a company in a year, show if they've made either a profit or a loss. And that's why they were previously called the profit and loss accounts. In terms of the profit, there are actually 4 different types of profits, of which 3 of them you can find on the income statements. So the 3 that you can find on the income statements are gross profit, operating profit, and net profit. Net profit is sometimes called profit for the year. It's just the new international accounting standard name for it. The 4th profit is retained profit, and retained profit you will find on the statement of financial position. Why do them? The first reason is, well, you need to do them for legal reasons, because it's compulsory for some companies to have to do their income statements, and in that case you'll need to do them in order to calculate your tax, and the stakeholder that may care about this is certainly going to be the government. Number 2 is you might want to use income statements to compare to previous years. That's previous years for you, because you might want to see how you are trending. Are you improving in terms of your profits, or are you worsening in terms of your profits? This is going to be really important to management in order to make decisions to try and improve the financial stability of the business. And number 3, similarly, is you want to use it to compare to your rivals, because you might have rivals in the same industry, and you might notice that they are producing a better net profit than you. Well, then you might want to compare to those rivals and work out how they're managing to do that, and if that's something that management can try and replicate in order to improve. Fourthly is you might want to use income statements to help current investors, being your shareholders, because they might want to know exactly how the company is doing in terms of the net profit, and that may depict how much they are paid in their dividends. But remember, dividends are paid out of retained profits, and retained profits are not on the income statements, they're on the statement of financial position. Fifthly is you might want to use income statements to encourage new or potential investors, because you might want to say to your potential shareholders, look, we're making this much profit for the year, this much net profit, come and invest in us. So it might be useful as a tool to try and incentivize potential shareholders to invest in your business. So let's look at an income statement that I've built right here. So it's for 2020, that's the year, and the company is Chop Sesh. And here we've got a pound sign, a dash, and 3 zeros, so that just means £1,000. So if you see 200 here, that means £200,000. Okay, the income statement, or the profit and loss account, will always be in this fashion. Let's go through it. So you're going to start with revenue. Revenue is also turnover, and essentially what that is for all your products is just the sales times the price. Sales times the price. That will come to your revenue, or otherwise known as your turnover. And in this case, the turnover is £200,000, okay? So the big thing is the big in, being your revenue, is going to be at the top of the income statement. And then after that, you're going to start taking away all your costs to come to your different profits. So the first cost you're going to take away is your cost of sales. Your cost of sales is effectively your manufacturing costs, or your direct costs. In this case, it's in brackets, because brackets means negative. It's just the same as putting minus 50. So if you've got £200,000 minus £50,000, then you're going to come to the first profit, which is £150,000, and that is your gross profit. Your gross profit is always going to be the first profit you'll see on the income statement. From that, you can calculate your gross profit margin. For that, check out the video. The card is going to appear very shortly. After that, gross profit, you will take away your operating expenses. Your operating expenses is essentially your indirect costs. So those costs that cannot be directly attributable to the manufacturing of the goods. Examples of that could be marketing or admin. Again, it's in brackets because it's negative and it's £100,000. So 150 minus 100 comes to 50, which comes to your next type of profit, which is your operating profit. And your operating profit here is £50,000. For operating profit, again, you can calculate your operating profit margin, which is another financial indicator or financial ratio that stakeholders might be interested in. After you have your operating profit, you'll take away your interest and your taxes. Here we put them as minus 25 in brackets, so negative 25, and 50 minus 25 comes to 25, which is your net profit. So our net profits here are £25, £25,000. And the key thing to note is that your net profit, also called your profit for the year, and the main thing is it's the bottom line. It's referred to as that as its nickname because it is the bottom line of the income statement. It's right there. And from that, you can calculate your net profit margin. And for that, click the card up there now. The last thing to note is a few quirks in the analysis of income statements. So key things to look out for. First thing is here, the cost of sales. Well, if you see the cost of sales is increasing, well, that might actually not necessarily be a bad thing because the cost of sales increasing could be a result of your revenue increasing. Because if you're making t-shirts, a cost of sale is likely to be cotton. And if you're selling more t-shirts, you need to have more cotton to make those t-shirts from. So it's natural in some cases that your cost of sales will increase. So just watch out for that as an analysis point. Additionally, your operating expenses, well, you're trying to keep them as slim as is possible for your business to function. And finally, remember, retained profits, you'll find that on the statement of financial position. I hope that helps, and I'll see you at the next video.